Hello and a very warm welcome to the first of our two sessions on investing in ASEAN, brought to you by BDO and the UK-ASEAN Business Council. Over the next 2 days, we'll be covering 6 markets in one of the world's fastest growing regions in the world, Southeast Asia. Good morning to our guests in the UK and good afternoon to our guests in ASEAN. I'm Alan Lai from the UK-ASEAN Business Council based in Brunei and delighted to be your MC and moderator for these 2 days. The aim of these webinars is to provide expert insight into the investment environment, a look at entry strategies, tax landscapes, and incentives and potential challenges that you should be aware of. In addition, we'll also hear from the Department of Business and Trade's Export Support Service, who will share how they can help UK companies enter and grow in Southeast Asia. Today, we'll be looking at Malaysia, Singapore, and Vietnam, and the presentations will follow. After the presentations, we'll have a panel discussion where you can pose your questions to the experts. And tomorrow, we'll be covering Indonesia, Thailand, and the Philippines. Lots to get through. Most importantly, we also want to hear from you, our participants. Please do pop your questions in the Q&A box, and we'll get to them during the panel discussion. Or if you'd like to say hi and tell us where you're from, please do that too in the chat box. To get us underway, it's my pleasure to invite Marty Lau, the Partner, Corporate Finance and Deals, Transaction Services at BDO, based in London, to say a few words of welcome. Marty, over to you.
Thank you, Alan, and good morning, good afternoon, depending on where you are. In London, we're enjoying a lovely, sunny but chilly autumn morning. I'm a corporate finance partner based in the London office of BDO. I'm joined today by my colleagues from Malaysia, Singapore, and Vietnam, who are all experts in advising international businesses, trading with and investing in their respective countries. And today we're very grateful to be partnering with UKABC and the UK Departments for Business and Trade. So thank you very much in advance to Alan and to UKABC team, and also James from the DBT for your participation and also insights today. So in a rapidly changing global landscape and a complicated geopolitical environment, I believe that ASEAN presents very favorable trading and investment opportunities for UK companies who are expanding their businesses internationally. As we know, with the UK-ASEAN trade being all-time high now, worth, I believe, close to 50 billion pounds, coupled with the UK's recent accession to the CPTPP free trade agreement, which Singapore, Malaysia, and Vietnam, of course, are part of, I think is now a good time for UK companies to consider investing or trade with ASEAN. I'm sure the speakers will provide invaluable insights to the audience with regards to trading with or investing in ASEAN. There will be, as Alan said, there will be a panel session followed by Q&A. So please interact and post your questions, and we'll do our best to answer accordingly. So thank you for joining us today. And let's dive into the discussions. And I shall now hand over to Dr. James Thackery, the Director of Exports Asia Pacific from the UK Department for Business and Trade. Thank you, James.
Brilliant. Thank you very much, Marty. And thank you to all of you for dialing in and taking part in this webinar. It's really exciting to see so many people interested in this part of the world. So yes, my name is James Thackery. I'm the Director for Exports for Asia Pacific, and I'm based in Vietnam. And you're going to hear today about lots of opportunities in the part of the world where I live. And my job for the next couple of minutes is just to showcase how DBT, the Department for Business and Trade, and UK government more widely can support you to take advantage of those opportunities that you hear about. Just very quickly about me and my team. So I'm based in Vietnam, but I have a team of 24 people that cover Northeast Asia, Southeast Asia, and Australia and New Zealand. And what we do is work with businesses on a daily basis to match make and find opportunities with businesses, with distributors and agents in the market. but we are just one of a family, an ecosystem of different services that DBT provides. And I will just share my screen to talk you through a few of them before we launch into the larger presentations. So hopefully that is now viewing. Just quickly, before I go into the ecosystem, there is a QR code on the screen now. These slides are all going to be shared with you, but this QR code takes you directly to the great.gov.uk webpage, which is the starting point for anyone looking for detailed information on how DBT can support you on your export journey. So, as mentioned, the Export Support Service, or ESS, is part of a wide support offer from DBT to UK businesses. So whether you need training or access to networks or strategic light touch advice, or if you just want to do it yourself with some of the self-serve information, there are a range of different options and services that we can provide to help you to get whatever you need to make that next business venture. On the kind of ESS ecosystem side, we have a number of different services, which I'll talk you through in a bit more detail on my next slide. But what this is here to show is that essentially, no matter where you are on your export journey, no matter what kind of level of detail you need, or whether you've exported before, or this is completely new to you, or you're an absolute pro, there are ways that DBT can support you with different types of tailored services. And the point of the ecosystem is that once you're in, you can move between the different services to make sure you're always getting support at whatever point of the export journey that you need. To talk you through just a few of the specific offers, there's of course the universal digital offer, so everything that's on great.gov.uk, and this is the starting point for anything. Any question you have, start here, but there are, of course, lots of different options where your question isn't answered immediately, but there's a wealth of information here to get you started. Where you do have questions which aren't answered, you can go directly to the export support team. And this is a team whose job it is to take your questions, whether they're relatively simple ones or specific ones around, what a tariff rate might be, all the way to more complex things around, the specs of whatever product you're exporting. We have a whole team of people whose job it is to research and find those answers for you to help you get started with that export. If it's too complex, they send it out to post for more tailored advice. But even if we can't answer it for you perfectly, we will always give you the next step of other people who may be able to have the answers given a bit more time. We also have the Export Academy, which is available to everyone. So it's a free curriculum of really, really fantastic training modules. And most importantly, it teaches you and guides you along the process of creating an export action plan, which is the kind of essential strategic document that really just helps take your kind of export plan to the next level. And then finally, on this slide, we have the International Trade Advisory Service. This is the ITAs are our one-to-one service that provide really specialist support for businesses to find the right markets and break into them. Just very quickly about my team, we are here essentially as a kind of matchmaking service. So we have people across all parts of Asia Pacific whose job it is to find out what your product is, what you want to achieve, and help you to do that through contacts and networks. So we generally support businesses who have a product that they're ready to export with a higher turnover. So we are at that kind of later stage of the export journey. But we have already helped over 2,000 businesses to make these opportunities. So please do get in touch if you think that is relevant to you. Finally, this is outside of DBT, but there is a sister service in UK Export Finance, who are an absolutely brilliant group of people who make sure that if anyone, any business needs credit and a loan to achieve what they want to do in the export space, that they have that possibility to do it. So a lot of this slide can be a bit overwhelming because they seem like massive numbers, and maybe only for very big businesses, but actually they are really excellent and have a great track record of supporting SMEs as well. So if you think that will make the difference for you, please do reach out to them. I will just finish with a final slide showing the QR code again, but thank you so much for this short period to advertise some of the ways that DBT can help you. As I said, these slides will be shared. I know I covered a lot of detail, but you can go through them in more depth at your own time, and we will always be here to help. So thank you very much for your time.
Thank you very much, James. I've popped some useful links from your presentation in the chat for everyone to follow up. But just very quickly, James, we do have a question from one of the attendees. Are there any charges involved for UK companies?
Thanks, Alan. No. So all of the services that I've covered here are free services from government. We do also have a big catalogue of partners that do have kind of charged specialised services, and that is a kind of a standard part of the export journey. There's a part that lots of businesses encounter where they've got to spend money to make some money and invest in getting that kind of specialist service. And when they're at that part of the journey, then we have a good group of trusted partners who can help businesses to deliver that when they need it.
Fantastic, thank you. I've got another question very quickly from John. What services can be provided to SMEs with less than 500k turnover?
Yeah, thank you. That's a great question. So there are the Export Academy is a really good starting point for businesses at that stage. There are of course, the universal digital offer as well, the export support team, any question that you have. But really a good starting point for any business that's less than that turnover rate is to try and get in contact with the ITA, the International Trade Advisor Service. So they operate with businesses that are have a wider range than that, and that's a very good starting place to get that tailored one-to-one support. But the best thing to do is to follow that QR code, get started with the different services, and then be guided by the process for different services that work for you.
Thank you very much, James. And for those that missed the QR code, the links are in the chat, including the link to the UK Export Academy. And James will be back to join us during the panel session. So if you do have more questions for him, please do stay on for the panel discussion that will take place after our insightful presentations. And on that note, we're going to now move on to our first country, which is Malaysia. And we'll be joined by Stephen Koh, the Executive Director of BDO Malaysia, and David Lai, the Head of Tax Advisory of BDO Malaysia as well. Stephen, welcome. Please do tell us more about Malaysia.
Thanks, Alan. All right. Good morning and good afternoon, everyone, depending on where you are. It's bright and sunny in the UK, as per what Marty has said, or is I hope it's not gloom and raining like here in Malaysia at the moment. Anyway, Sina, next slide, please. Thank you. All right, let's start off with Malaysia. We are a secular, multicultural and multilingual nation, definitely, due to various historical factors. And the key thing or the key idea on this slide is actually we just ratified our comprehensive progressive agreement for Trans-Pacific Partnership, CPTPP, not long, slightly more than a year ago on 30th of September 2022, and it just took effect less than a year ago on 29th of November. And we also ratified earlier on in 2022, the Regional Comprehensive Economic Partnership. So basically, Malaysia is a destination or a jurisdiction that welcome foreign direct investments to set up. And we are, from a geographical perspective, just some background of the country, we are slightly smaller than Germany in Europe. We have a population of 32.7 million. Ringgit is our currency. Definitely, we are a multilingual nation, and hence you have a talented workforce that is multilingual and able to support your business in the region and beyond. and we are a parliamentary democracy with constitutional monarch. Definitely is tropical, warm and sunny. And we have 13 states and 3 federal territories for those who are interested. Next slide, please, Sina. So what is the benefit of coming to Malaysia or investing in Malaysia? So basically, we are centrally located in the heart of Southeast Asia, and we are a gateway to ASEAN and beyond, definitely. And one of the key element, I won't sell it as the core of it, but definitely in terms of cost advantage, you get the value for money solution in the sense that you have access to a talented workforce that perhaps is a little bit more affordable than the rest in the region. And we are well connected with infrastructures. We have good infrastructures in terms of ports, airports, and highways, and also quality healthcare, which I will share later on. And we have actually a growth rate of 5.3% per annum over the last 2 decades. And we are not far. In fact, Malaysia is within a 4 to 5 hours radius in terms of flight hours into various capital cities in Southeast Asia and Greater China as well. Next slide, please. So, in terms of approved domestic investments, this on the left-hand side on my screen, you can see that we have total investments of 15.5 billion. That is on the domestic front. But if you look at the right-hand side, that is where I want to point to you. That is 179.6 billion of total investments that is approved by the Malaysian the MIDA, which is Malaysia's Investment Development Authority, that is dealing with the multinationals and foreigners who are coming to invest in Malaysia. We have total 179.6 billion. These are all 2022 numbers for your information, but and we expect, or the government is expecting more in terms of coming to 2023. And recently, Tesla just actually established its footprint in Malaysia, and they are actually looking at investing more in Malaysia in terms of manufacturing their EVs, electrical vehicles, and that is on the US, that is on the foreign investments coming from the United States on the far end of Earth. The other side that is closer to home, we have Geely, that is also part of investing in Malaysia. They actually took a controlling stake in our local automotive company called Proton. That is also one of the major investors in terms of the automotive sector. Why I bring the automotive sector as an example is because it is actually an industry that require heavy upfront investments, and the barrier to entry is high. And definitely Malaysia definitely is looking at, in terms of the direction for the industry itself, is to compete with Thailand and Indonesia for automotive investments coming into this region. And it's not only restricted to that, we also welcome various sectors, as you can see at the bottom right-hand corner. We have electrical, electronics, basic metal products, food manufacturing, and chemicals and chemical products. Of course, last but not least, although it's not very interesting in terms of from an ESG perspective in this era, Malaysia is an oil and gas player, definitely. And for those oil and gas players involved in the energy sector, definitely Malaysia is a country that you will not miss. Next slide, please. This is the National Investment Aspirations that's actually published by MIDA in 2022. So basically, we are trying to increase our economic complexity, creating high-value jobs, extend domestic linkages, develop new and existing clusters. Sorry, yeah, I just need to minimize this. And also improve inclusivity. So what we are trying to do is basically, in terms of 1 to 5, we are telling the world that Malaysia is ready to roar and move up the value chain. And hence, we do welcome foreign direct investments as a country, and we do welcome technology transfers, sharing of knowledge whatsoever that actually can move the country to the next level of the value chain and improve the economic well-being of the workforce. And definitely, in terms of that, we are also a beneficiary of friendshoring because of the tensions that is between the West and China, and Malaysia and other Southeast Asian jurisdictions become a beneficiary of friendshoring investments. Next slide. And further extension of the National Investment Aspirations, basically this one is just to showcase we are also pursuing green growth, sustainability, and resilience. Basically, the rest of the points I have covered in the previous slide, so I'm not going to repeat it here. But while we are pursuing growth, we are also pursuing quality growth in terms of from an environmental, social, and governance perspective. Unlike unlike 2 or 3 decades ago, where we just pursue any kind of growth. So with the ESG and sustainability team kicking in globally, Malaysia is also well aware of it, and we are actually taking part in terms of incorporating that into part of our investment aspirations, that we want quality investments that actually put ourselves up the value chain and overall improve the well-being and create wealth for the nation. So next slide. The 12 Malaysia plan is basically the latest Malaysia plan, which is on a 5-year cycle. So we are basically looking at 3 dimensions. 3 main thrusts of the economy is from economic empowerment. This is the empowerment term is actually more of empowering the population, the people, the workforce, and those who actually participate in the economy for economic returns, basically. And environmental sustainability is a very important theme. We actually enshrine that into our Malaysia plan, which is our official country planning document. You can take this as the strategic plan of Malaysia if you want to see it that way. And social re-engineering, basically, we are trying to move and create social mobility for those on the lower end segment of the society to have opportunities to move up and improve their well-being and their life. Next slide. So basically, you want to move up the value chain, you want to attract investments, you want to attract quality investments into the country. You can't do that without a talented workforce. And hence, our investments into producing quality talents is also very heavy. We actually, if you actually look at the numbers here, we are very engineering, manufacturing, and construction heavy in terms of enrollment into those courses that are relevant to those sectors. And also from the science and mathematics and information technology or computer perspective, we also have heavy investments. In fact, you can see the arts and humanities are on the lower end of things. So in other words, in this slide, what I want to highlight is we are investing heavily into those areas to produce talents that required by those sectors, which we are targeting the investments that are driving the growth of the economy going forward, to propel us forward. Next slide. Of course, for those who are coming to this part of the world, healthcare is always a necessity, a basic necessity, and to a certain extent, is a basic right for everyone. So Malaysia actually offered world-class healthcare, basically with high quality at an affordable price. We have global recognition in terms of our quality of our healthcare. Ease of communication, as mentioned earlier, we are multilingual, and hence language should not be a barrier. Easy accessibility, we basically have a government and private hospitals infrastructure that is well spread out in key investment destinations. We are competitively affordable compared to our other peers in the region. And for those who are Muslims and from Islamic countries, definitely Malaysia is a global halal hub. So for those who are restricted to a certain extent because of your religious belief, fret not. We have the necessary solution, as Malaysia is also a progressive Islamic country. I just have to put it in the right perspective. Next slide. As you can see in this slide, we are trying to showcase the key infrastructure that is available in the country that is deemed to be important for foreign investors. Now we have port infrastructures on both ends of Straits of Malacca. On the left is Straits of Malacca, and on the right is South China Sea. On the East Malaysia side, we will have a Bintulu port that's directly facing the South China Sea. And not on this slide, we did not highlight there's an Asian supply base that is supplying the oil, catering to the oil and gas players, that is located in Labuan, off the coast of Sabah and Sarawak. And hence the highway infrastructure, and you can see that not only the peninsular Malaysia that is more matured, but on the Borneo side of our territory, we are also constructing a major highway called the Pan-Borneo Highway to actually facilitate investments and trade and develop Sabah and Sarawak, which are currently slightly behind in terms of peninsula, in terms of development, and we definitely welcome investments into such regions. As you can see, we have the Sabah Economic Development and Investment Authority, SEDIA, that is promoting investments into Sabah. We have the RECORDA, the Regional Corridor Development Authority, that is actually encouraging investments into the interior part of Sarawak. And not forgetting the various economic regions that is highlighted in this slide. Iskandar supposed to be the back end, or rather the support, providing the necessary support to actually for those who are actually investing in Singapore, and we provide complementary services at affordable cost. And for those going to the north, those who are in the heavy manufacturing like car assembly players, the Northern Corridor Implementation Authority perhaps will interest you. And for those going into the East Coast, perhaps the oil and gas players, because off the coast of our East Coast and off the coast of Sarawak, and off the coast of Sabah to a certain extent, are where the concentration of the oil and gas oil fields and the gas fields are. In terms of telecommunication infrastructure, we are definitely there. We are world class. We are actually implementing our 5th generation of 5G coverage nationwide, with a target to actually cover at least 85% of the country in 2 years' time. By 2025, you should be able to access, in most urban centers, 5G connection. Next slide. That's the end of my presentation. Thank you. And I would like to pass on to my colleague to introduce the tax system and incentives for those coming into this country. Over to you, David.
Thank you very much, Stephen, for giving a good overview of Malaysia and where our focus areas are for investment. A very good morning, everyone from the UK, and good afternoon to those from ASEAN. Thank you so much for joining. And I believe participants today are from UK-ABC members, and also some invited guests from BDO as well. Thank you very much for being here. My name is David Lai, and I head the tax advisory division within BDO in Malaysia. We provide advice to companies trying to set up in Malaysia, mainly from the perspective of structuring for efficiency, both for optimizing their tax positions and also for exploring the use of tax incentives. So I will start by just giving a quick overview of the budget 2024, which was actually announced quite recently, back on 13th of October. Budget 2024 is actually a continuation of the policies shaped by the Madani principles, which basically centers around the principles of sustainability, care, respect, innovation, prosperity, and trust. So the tax policies were geared towards addressing income disparity. There was no GST announced for this time because it was felt that it was a progressive tax and it's not the right time for Malaysia. Instead, we saw an increase in service tax from 6% to 8% starting next year. Implementation of high-value goods tax and capital gains tax on unlisted shares. And a lot of these changes are also to try to align with EU and OECD practices. There were no increases in income tax, which is good news. The budget overall was expansionary to boost the economy and to increase allocations to education and health, and also for uplifting the infrastructure for development, especially for the rural areas. So I think I won't read through what's in this slide. It basically gives a snapshot of how the financials for 2023 as released by our central bank. Yeah. Okay, next slide, please. Just a quick one on the scope of income tax. Malaysia is not a worldwide scope tax system. It's a territorial scope, which means that you are only taxed on income accruing in or derived from Malaysia, or if it's foreign source income, only when it is received in Malaysia. So in other words, foreign source income that is not brought back to Malaysia is not within the scope of income tax. And of course, there are certain exemptions available. Key tax rates: corporate income tax, 24%, real property gains tax from 10% to 30%, We have the old sales tax and service tax system, which is 10%, 5% for sales tax, and service tax at 6%. Stamp duty on instruments is 0.3% for shares, so it's not a lot. The new tax that has been announced is capital gains tax, which comes in on 1st January 2024. I think what is written here is 1st March. There was a recent change in the finance bill, which was just released today. It's actually starting 1st January 2024. It's 10% on the gross sales value of the 10% of the capital gain, not the gross sales value, 10% of the capital gain. Next, tax treaties. We have treaties with 174 countries as at 24th October 2023. Sorry about the typo, it's 174. There are, of course, also transfer pricing rules which we need to comply with in Malaysia. Next slide, please. Typically, when companies look at starting up in Malaysia, we look at different types of entities, and these are the different forms: rep office, company branch, limited liability partnership, and joint ventures. So I think if you're interested, then that's an analysis we'll do to compare the pros and cons of each. These are, yes, next slide, please. Yeah, these are the different types of tax incentives that typically have in Malaysia: a pioneer status, which is tax exemption or investment tax allowance on your capital expenditure, reinvestment allowance on capital expenditure as well, stamp duty exemptions, and import and excise duty exemptions. And in addition to that, for certain promoted activities like Industry 4.0 or high-tech industries, you'll get grants, for example, for certain areas, and also soft loans and interest subsidies as well. Next slide. Okay, just a snapshot of different incentives recently announced in the budget for Global Services Hub to encourage multinationals to come to Malaysia to set up a services hub. The exemptions available and also lower income tax rates from 5% to 10%. And then also there are tax incentives for green activities, green ITA, investment tax allowance, and tax exemptions. Film production companies have been earmarked for incentives as well. And in addition to that, there are tax incentives for manufacturing services and agricultural companies that are automating in Malaysia. Grants are available for smart automation as well. Next slide. The earlier incentives that are still applicable now and have been extended include companies relocating their manufacturing facilities into Malaysia. That will come with 0% tax rate. And also, in addition to that, new companies undertaking shipbuilding and ship repairing activities will also be given tax incentives. And aerospace companies in Malaysia undertaking high-value activities would also enjoy tax incentives. Income tax exemption also will be given at 100% for Bionexus status companies. So sorry about rushing through this. I know the time is quite tight. Maybe we can talk a bit more during the panel discussion. So I've come to the end. Thank you very much.
Thank you very much, David, and to Stephen as well. Lots to take in. I'm sure there'll be lots of questions during the panel discussion. Please do pop your questions into the Q&A box and we'll get to them during the panel. We've still got Singapore and Vietnam to get to. But first, let's move on to Singapore and find out more about the opportunities and the market there. A very warm welcome to Evelyn Lim, the Executive Director of BDO Singapore. Evelyn, good to see you again. Over to you.
Thank you, Alan. Good morning, good afternoon, ladies and gentlemen. I'm Evelyn Lim, Executive Tax Director, heading the Corporate Tax Advisory team in Singapore. Very happy to be here to talk about Singapore's trade, investments, and tax environments. A small country with a population of close to 6 million people, of which 40% are in the workforce. Singapore has achieved many accolades, as you can see, for its pro-business policy, economic, political, and operational stability, as well as being digitally competitive and showing strong commitment to innovation. Singapore has always been the top choice for investors and business owners. What are the industries which contribute to Singapore's GDP? As you can see, it includes manufacturing, wholesale trade, finance, insurance, and many others. In 2022, right after COVID, we did well. Singapore achieved an annual GDP growth rate of 3.65%. However, its economic growth momentum in 2023 year-to-date has slowed down. The Ministry of Trade and Industry has lowered Singapore's GDP growth forecast for 2023 to the range of 0.5 to 1.5%. Despite the headwinds, Singapore will continue to strengthen its economic success, political stability, diplomatic efforts, and commitment to regional and international cooperation. Let's take a look at some of the trade agreements which Singapore has established so far. It's an extensive free trade agreement network which Singapore has, 15 bilateral, 12 regional FTAs, digital economy agreements, and green economy framework. This includes some of the largest combined trade agreements in the ASEAN-China, ASEAN-India, and ASEAN-Hong Kong trade blocs, providing Singapore-based businesses with access to preferential markets, free or reduced import tariffs, as well as enhanced intellectual property regulations. Singapore and the United Kingdom, how are we doing? We are making progress towards concluding a new agreement to protect investors and facilitate investments flow between the two countries. Negotiations on the Singapore-UK Bilateral Investments Treaty is underway. The UK's recent accessions to the CPTPP will also complement the trade agreement by helping British businesses based in Singapore to better access regional markets and supply chains. Make a guess how many British businesses are already in Singapore. Singapore is already home to more than 6,000 British businesses, and UK is the largest European investor in Singapore. Singapore, in turn, is the UK's third largest Asian investor and largest trading partner in Southeast Asia. All thanks to the ease of doing business in Singapore, which I shall now talk about. Next, please. Doing business in Singapore, we are well known for the easy setup of a legal entity. Most of the businesses in Singapore would choose to set up an entity limited by shares, which is usually known as your company's name with a private limited behind. You can set up a company with as low as $1, Sing dollar share capital. And for most industries, it can be 100% foreign owned. And there's no restriction on the payment of dividend. Of course, it has to be paid out of profits. And there's no capital duty when you contribute capital or when you repatriate capital. Shareholders-wise, it can be set up as easy as just one shareholder. One resident director is necessary, and you need to appoint a company secretary. Registered address, you need to have a registered office located in Singapore. Audit, a common question raised by our clients. Do I need to appoint an auditor? Yes, you do if you do not qualify for exemption, which typically is available to smaller companies. Otherwise, appoint an auditor within 3 months of incorporation. And you need to lodge your financial statements with the Accounting and Corporate Regulatory Authority within 7 months after your financial year end. Tax filing, 2 deadlines to take note of: 3 months after your financial year end to put in an estimate of what is the tax that you need to pay, followed by a final tax return on the 30th of November, earlier if possible. A very quick run-through of our tax system, because to a certain extent, it's very similar to our friendly neighbor in Malaysia. So corporate tax rate of 17%, the lowest amongst the ASEAN countries. Yes, territorial taxation system, just like Malaysia. We tax income derived or sourced in Singapore. We also have foreign source income exemption, which means company resident in Singapore, when remitting certain foreign source income into Singapore, can enjoy exemption on those income. We have the carry forward relief as well as carry back relief system, which means losses, capital allowances not utilized in the current year, you can carry them forward. Good relief system, which is available to a group belonging to Singapore, comprising Singapore entities. By meeting the necessary conditions, you can actually share your losses, you can share your capital allowances, as well as donations made from a loss-making company with a profitable company. How about withholding tax? Another key concern of foreign investors. When there is a payment made to a non-Singapore tax resident, withholding tax needs to be taken care of. There is a timeline for withholding tax to be paid, as well as penalty for non-payment. So take note, for dividend payment, there is no dividend withholding tax, but for royalty interest, there would be. Domestic rate is 10% for withholding tax on royalty and 15% on interest. This can be reduced by the double taxation agreement signed between Singapore and the relevant countries. We are well known for not having capital gains tax. Stamp duty at 0.2% on the transfer of shares. There are also stamp duty on transfer of real estate. If you'd like to know more on stamp duty, we can always arrange a separate session. Now, tax incentive. Tax incentive is certainly key on the mind of many foreign investors. In fact, that's the area that I advise on a lot, because we do have a host of tax incentives to offer to foreign investors who can bring economic benefits to the country. Incentive like the Pioneer Incentive, which is typically given to manufacturing businesses, can enjoy tax exemption, zero tax to be paid on qualifying pioneer activities. Development and expansion incentive is the most common incentive and most sought after. If you can bring qualifying activities here, high value add, substantive activities being generated in the country, that is something that you can go for, whether it's a 5 or 10% tax rate to be enjoyed. Global Trader Program, another one that is very popular for companies carrying on international trading activities here. 5 or 10 is what you can negotiate for. We have Maritime Sector Incentive, which provides tax exemption on qualifying shipping income to qualifying companies, whether it's Singapore flag vessels or foreign flag vessels. Next, please. This is just to show that Singapore has signed close to 100 double taxation agreements with all the countries all over the world. As you can see, all the regions have been covered. Asia Pacific, Africa, Middle East. Americas is the one, USA is the one that we have not yet signed. Europe, as you can see, most of the European countries have already signed DTA with Singapore. Next. Here are some very important Singapore tax updates to take note of. In line with the development to curb global-based erosion and profit shifting, Singapore will implement a domestic top-up tax to top up the multinational enterprise group's effective tax rate in Singapore to 15% starting from 2025. Whilst the date of 1st of January 2025 has been announced, Singapore is still monitoring the international tax development closely before implementation. At the same time, businesses have been assured that they will be given enough time to implement this complex domestic top-up tax. With this domestic top-up tax comes a lot of questions. What happened to your existing tax incentive regime? The date of implementation of the domestic tax top-up tax has been announced. At the same time, we see many of the tax incentives being extended as well. What does that tell us? It tells us that the tax incentive regime in Singapore is here to stay. Next, establishing good tax, Sheena, back to the previous slides. It's on Singapore is promoting good tax governance. The Inland Revenue Authority of Singapore has implemented the tax governance framework, as well as the corporate tax risk management and control framework. What are these? These are aimed at encouraging companies to voluntarily adopt good tax governance, as well as internal control. At the same time, the tax authority would offer some benefits in return. So these two frameworks aim at large companies with complex structures and business models, such as the public listed companies, encouraging them to have good internal control as well as good tax governance. Last but not least, very interesting development in Singapore. If you have been hearing me, I said no capital gains tax in Singapore in my earlier slides, but with the change come 1st January 2024, Singapore is going to introduce the taxation of foreign source disposal gains in order to align the tax treatment of foreign source disposal gains with the European Commission's guidance. What does that mean? It means that if you fall into the relevant entity definition and you derive profits from disposal of foreign assets, which can be movable and immovable properties, but they are located outside Singapore, and you make a gain and you remit the gains after 1st of January 2024, you could be taxed on that capital gains if you could not demonstrate economic substance has been maintained by the entity. So watch this space, something exciting is going to happen. But in fact, with the above changes, I feel that our Singapore tax scene has been very much spiced up. Moving on, just a slide on our indirect tax regime, a very quick one on GST, which has been capped, goods and services tax, which has been capped at 7% for many years until January this year. And GST is now charged at 8% on the supply of goods and services made in Singapore by a GST registered person. Registration is required if a business makes taxable supply in excess of 1 million for a 12-month period. This 8% is only for 1 year. The rate will go up come 1st January 2024. So you can expect people in Singapore are now buying up big ticket items before the 1% GST rate hike. Zero rating is available for export of goods and international services, as well as exemption, which is also applicable to certain transactions, like the sale or rental of residential properties. Next. What are the opportunities available in Singapore? Certainly, there are plenty. Singapore is the gateway to Asia and serves as a regional headquarters in Singapore for thousands of global companies. It is a first choice for many companies, as well as startups who want to invest in the region, hence making Singapore a much preferred location to set up investment holding company. At the same time, with its highly developed economy, sophisticated infrastructure and workforce, strong support for innovation, we see Singapore become an attractive choice for many companies to set up their procurement hub, R&D center, IP hub, maritime hub, just to name a few. Next. So with opportunities, we also are facing challenges. Like many countries in the world, we are impacted by the unprecedented geopolitical risk, inflation, high cost of business, and shortage of labor. With strong support from the government, trade association, and business community, Singapore is well positioned to tide over this difficult period. How do we do that? Next, please. The attractive opportunity that is available in Singapore just requires you to stay up to date with changes in rules and regulations. Do your homework, careful planning and due diligence, forming local partnerships, seeking advice from professionals would make your investment into Singapore a success. To complete the list, make good contacts, attend networking sessions. So I'd like to share an event which was recently held in Singapore, a collaboration between BDO Singapore and UK-ASEAN Business Council was a successful one, bringing business connections closer to home. With that, I end my presentation. Thank you.
Thank you so much, Evelyn, for that great presentation, and especially ending with those wonderful pictures. We certainly enjoyed our networking session, and thank you again for kindly hosting us. Up next is another CPTPP member, Vietnam. There are actually 4 ASEAN member states in the CPTPP: Singapore, Malaysia, Vietnam, and one other. Bonus points for anyone who can name the 4th. Vietnam is one of the fastest growing economies in the world and continues to do well despite global headwinds. Its population of almost 100 million people is vibrant, young, and ambitious. To tell us more, we are delighted to welcome Hilary Vu, Executive Director of BDO Vietnam. Hilary, welcome. Over to you.
Thank you very much, Alan, and a very good afternoon to everybody from Ho Chi Minh City, where I base, and also a very good morning to everybody from UK-ASEAN. Okay, so this is our real pleasure to actually to be able to provide you with some information for Vietnam, and especially the Vietnam's foreign direct investment into Vietnam from the from the globe. Okay, so just a quick one on some Vietnam latest economic updates. I think that Vietnam forecasts quite a moderate growth this year, 4.7%, and I think that in 2024 and 2025, the growth rate is expected to be higher, and the reason a little bit we slow from 8% in 2022, but then in 2023 it can go to a little bit below 5%. Okay, because of some of the difficulties in the first half of 2023, and however, with our government commitment and the whole country with the close to 100 million populations, I think that we are really a good destination for investment, and foreign investment, direct investment into Vietnam continue to be a very important to Vietnam, and also it's one of the brightest signal and as a destination for Vietnam. So Vietnam still remains as an outperformer in ASEAN in terms of attracting the FDI. Okay. So in the first 9 months of 2023, our year-on-year is actually increase of 7.7%. Okay, so next slide, please. Okay, now our government has policy in place that actually really boosts FDI in Vietnam, because we know the importance of FDI in Vietnam. Okay, so if you can see that we also move forward on many free trade agreements, and UKABC is one of them, and also we are in numbers of bilateral and multinational free trade agreement. And also this year in September, as you can see that the US and Vietnam relationship it's come to a comprehensive strategic partnership. It doesn't mean that only for the US, but also for the whole FDI in Vietnam. And also Vietnam made a very ambitious pledge to actually to reach the net zero emissions in 2050. All right, okay. So here is some of the information in terms of statistics, which tell you about the registered capital is actually the increase of almost 8%, and also our import and export. And you can look at that accumulated as September 2023 is 144 countries having investment in Vietnam. And actually, our investment FDI actually received from the ASEAN country, from Singapore, from Japan, but especially also from US and UK. Okay, so next slide, please. I want to actually tell you a little bit about the some of the provinces, some of the area in the provinces that actually receive the most FDI into Vietnam. The first one, as you can see, is in Ho Chi Minh City, and the second one is in Bình Dương, which is also nearby Ho Chi Minh cities. And the third one is Hanoi, which is the north of Vietnam, our capital, and also the other provinces like Dong Nai and then Bắc Giang, some of the northern provinces in Vietnam. Actually, this year we continue to see the high investment, foreign investment into the northern provinces in Vietnam. Okay, so some very quick one about the Vietnam investment climate. Why Vietnam become a quite attractive destination? Certainly, we have some sort of internal factor within Vietnam that make Vietnam really become attractive, because of course that it is we are in the region that geographically actually is a very good location, and with our stability and also a very good economic growth in the last year, even after we also overcome COVID quickly, and also our very commitment from the government also create a very good very good environment for our foreign investment. And as again, we have a lot of a wide range of free trade agreement with a group of country, and especially we have a very large young population and competitive labor cost, and of course that our cultures is very open, resilient and friendly also. Okay, so this is some of the external factors which I think that we also benefit from the relocations way out of China, and also the relationship in terms of trade and economic and then investment between not only US but from the other countries with Vietnam for quite a number of years. Okay, so of course talking about the good things, the competitive advantages, now I also would like to mention to you some of the what we call challenges, but we believe that this challenges will become not really will be addressed very easily if you that's the reason why a lot of investment also came to Vietnam last year and this year and continue to be in the future. So the first thing to take note is that actually it's some administrative procedure is still a bit time consuming, and actually there's certain kind of overlapping regulations that might cause difficulties for implementation stage. And although that we have a big young large populations, but however for some of the skilled labor or restrictive labor practices, it is still one of the limitations. And also in terms of business environment and infrastructure also are the area to be improved. Okay, and also in terms of intellectual property, I think that we also already know about it, and Vietnam is quite committed to actually have the enforcement in terms of intellectual property. Next slide, please. Okay, so just a quick one in terms of doing business in Vietnam. I think the common investment form will be you can acquire shares or equity in existing company in Vietnam, or you can establish a new legal entity in Vietnam, which is also quite common in other countries as well. And certain investment incentive, as you can see, in terms of tax, in terms of non-tax, land rental or some exemptions, and in terms of other mechanism that actually we can provide to attract foreign investment in Vietnam. Okay, and next slide, please. Okay, in terms of tax, very quick one. I think that I would like to mention about sort of main taxes in Vietnam, which I think that our other colleague also mentioned, which is in corporate income tax and value-added tax. As you can see, the standard CIT rate in Vietnam is 20%, which is also one of the not high corporate income tax in Vietnam. And of course, we have a VAT tax, and I think that currently our standard VAT is 10%, but currently it reduced to 8% to help out the business in Vietnam. We also follow the transfer pricing regulations. And in terms of individual tax, I think that we also have subject to personal income tax on worldwide employment income for resident and for non-resident. We also have a mechanism for the 20% flat tax rates. Okay. Okay. So in terms of accounting, finance, labor, and other, I think that as you can see, accounting and finance system, we follow Vietnamese accounting standard. And for statutory audit, yes, FDI company also required to do audited account, submitted audited account. In terms of labor immigration, I think that we also have some requirement. And also, again, for businesses, I mean, for foreign investor, you can do the profit repatriation back. And you don't have, if you are an organization, you don't have to pay any tax for the profit. Okay, so next slide, please. Okay, so of course, these are the very sort of highlights for the for the business environment in Vietnam, especially the FDI. And actually, we are here video in Vietnam. We also can be available to help you with those services in terms of, as you can see on the slide here, we are also helping our foreign investor coming into Vietnam. Okay, so with this information, I think that I come to an end of my presentations, and of course that I will get back to any questions that.
Thank you very much, Hilary, for that excellent presentation. We've got a number of questions that are coming in. So I think we can take the presentation down. We will pop the link to the presentations where you can download all of these presentations into for your use when required. So we're going to turn now to the panel discussion and have a chat. We've got a number of questions that have come in. If you would like to ask any questions, please do pop them in the Q&A box, and we'll get to them. So looking forward to a bit of a discussion about all of that great content which we've just heard. So we have a number of questions that have come in. One that is in relation to the auditing, and I think I'm not sure who this was. This is from Cindy Tun. But what is the threshold for exemption from audit? There may be different thresholds for each country, but if you've got any thoughts on that, if I could put that, maybe we'll start with Malaysia first. Stephen, David.
Stephen, you want to take that question?
You can go, David. You can take it. You can take that.
Yeah, I think that there is an exemption for small companies in Malaysia from audit. I can't recall the threshold exactly, but I think that the main challenge with taking advantage of that is because the tax authorities will normally need audited accounts. So although the Securities Commission, not Securities, the Companies Commission of Malaysia has given a lower threshold for audit, in practice that's not used, because you would still need to file audited accounts for the purpose of tax returns.
Okay, to supplement what David has answered just now, basically in Malaysia, the approach is still rather conservative in terms of audit exemption, mainly because the tax authorities are looking at it, required it, and sometimes is a reality on the ground that the Inland Revenue Board, the tax authorities in Malaysia, and Companies Commission of Malaysia, they can't come to a common ground on the issue of tax exemption, because one felt that companies, whether they are public listed, whether they are public interest entities or private, they need to be regulated, they need to be audited, and hence the audit exemption in Malaysia is a topic that has been lingering on for at least the past 7 to 8 years, and we still haven't come to a landing. But the saving grace of this issue is, even though on the safe side, it's good for the companies to appoint auditor, to audit a small Sendirian Berhad or private entity in Malaysia is not very pricey. In fact, I always don't like to say this, but in terms of audit fees, Malaysia is actually one of the most competitive in the region. I won't use the word low, but I will just say it's very competitive, and definitely it will not be a big cost factor in terms of doing business in the overall scheme of things. Thank you.
Thank you very much.
I think
Stephen.
that explains why in practice most people still just go ahead with the audit, so to satisfy the tax obligations as well.
And always a good practice as well. Keep the books in order. Evelyn, Hilary, do you have any quick responses to that for Singapore and Vietnam?
Right. Hilary, I go first, yeah? So for Singapore, yes, audit exemption is available to small companies, and there are certain definition of small companies, and they go by, some quantitative criteria. So 2 out of the following 3 criteria, if they are met, you are considered small, meaning your total annual turnover is less than 10 million, or your total assets is less than or equal to 10 million, as well as your employees is less than or equal to 50. Any of the 2 of these conditions are met, you are considered small. And when you're small, you can enjoy audit exemption.
Thank you, Evelyn. Hilary?
Okay, now for Vietnam, there's no exemption for foreign invested company. So you all have to submit your audited accounts 90 days from your EIN. However, I think that this is, we've been attracting a lot of investment, and we have a lot of foreign invested companies in Vietnam. So audit is not really a very quite standard, and it's quite, it's not a challenge or whatever for the foreign invested company in Vietnam. Yeah.
Thank you, Hilary. So I'm going to move on to the next question. It's for Singapore and Malaysia. The question is from an anonymous attendee. Since Singapore is implementing the 15% global minimum tax, what will happen to the income tax holiday incentive? That's for Singapore and Malaysia. Evelyn, can I put that to you first, please? You're on mute, Evelyn.
Yes, sorry. Yes. Thank you for the questions. So the domestic top-up tax regime is applicable to multinational enterprises with group turnover of euro 750 million. So if you belong to this group, then the domestic top-up tax of 15% will be applicable to you. And in the event you are enjoying income tax holiday in Singapore, which means your effective tax rate is lower than 15%, then the top-up tax will be applicable to you. If, on the other hand, you do not belong to such a large M&E group, then this top-up tax will not be applicable to you, and you continue to enjoy the income tax holiday. Over to you, David.
Yeah, for Malaysia, there's a recent development because originally Malaysia wanted to implement GMT in 2024, which they realized is too ambitious. So they've now announced that it'll be applicable from 1st January 2025 onwards. I think the rules will be very similar to Singapore because at the end of the day, we are following the OECD model. I think in terms of tax incentives, from Malaysia's perspective, the tax incentives will still remain mainly because the 15% applies on a jurisdiction basis. So on a company by company basis, you could still enjoy tax incentives as long as from the jurisdiction basis as a whole for the country, it's still within the 15% threshold. Yeah, thanks.
Thank you very much, David. We've got an interesting question again for Vietnam. Are the corporate income tax and audited financial statements to be presented in Vietnamese language only?
Thank you for the question. I think that the short answer is no. The language that our government, our regulation is that you have to submit the audited accounts and the CIT's returns in Vietnamese to the authority. But of course that, like us, we provide our audited accounts for our clients and also CIT returns also in English. So the compulsory language, official language to submit to Vietnamese authority is Vietnamese, but it can be in English. And of course that all foreign invested company will have a bilingual one. That means that you have a set of Vietnamese in Vietnamese language and in English as well. Yeah.
And just to follow up on that, Hilary, is it easy? I mean, if you're a foreign company, a UK company that's operating in Vietnam, how difficult is it to get things translated?
I think that language used to be a big challenge, but I think that nowadays it is no longer a very big challenge. Although that it will be very quickly because the standard level of English in Vietnam has been improving a lot, and of course that is still not a daily verbal communications language. However, most of the it can be easily translated into English, and people use English like us, like a video, we use a working language. Okay.
So English is becoming a lot more prevalent. I know Malaysia and Singapore, English is widely used. It's a Commonwealth country, both Commonwealth members. But in Vietnam, would people need to bring a translator, for example, to business meetings in Vietnam?
My very latest observation is that a lot of people don't need translation already in the business communities. This is very encouraging because the young populations also is really the language has been much improved compared to the past, and I can see that it's still some people need to be translated, but however it is really good now in Vietnam.
Fantastic. I'd like to come back and ask a bit more about culture as well to everybody, because I think the way the UK looks at culture in Southeast Asia and the way we in Southeast Asia look at culture, it can be very different. But I've got a very interesting question from one of the participants. How to best structure a plan for an eventual exit of a Vietnam business owned by a foreign corporate shareholder in Singapore? So Evelyn and Hilary, and welcome comments from Stephen and David as well. But if you are a shareholder based in Singapore and you want to exit a business in Vietnam, what advice would you be willing to give?
So may I start or Evelyn?
Yeah, go ahead. I would assume the structure is a UK shareholder setting up a Singapore investment holding company to invest into Vietnam. So over to you, Hilary. If the Singapore shareholder were to exit Vietnam, what is the Vietnam's tax implication?
All right. Okay. I can take on from here. Okay. Just a very quick one. I think that, of course, our legal system allow you to exit Vietnam. And the principle is that you have to make sure that you all clear all the potential and existing obligations. In terms of you need to do, you need to inform authority that you want to exist, and you have to do certain licensing procedure. At the same time, the most important thing is that actually you have to clear the what we call is a tax audit, to clear all the tax status for the company. And of course, the process to exist is actually I have to say that take a bit of time in Vietnam. But there are certain quite standard procedure, and of course that we could always help with that one as well, with the investment in set up the company, and also when you want to exist. But I think that it's not something that is very challenging, but you need certain procedure to follow. Okay, so just a quick one on that one. I hope that I can answer something in general first. If the thing is that go into detail, of course that I'm very happy to explain in detail. Okay.
Thank you, Hilary. I'm sure they'll get in touch, and we will make the presentation slides available at the end of this webinar, which will conclude in about 15 minutes, and we'll put a link where you can download the presentation slides, and we'll have all of the contact information as well. But Evelyn, David, Stephen, did you want to very quickly touch on that? Because I'd like to ask a few more questions as well.
Yeah, so, you know, with that exit from a Singapore angle, today you can, and assuming a gain has been derived from this exit, today you can rely on the exemption rules to enjoy no tax at the Singapore level. But come 1st January 2024, the new rules that I just shared will need to be analyzed to see whether any capital gains tax will be imposed should that gain be remitted into Singapore. Thank you.
Thank you. And David, Stephen, in Malaysia, is it easy to exit? We were trying to get investments into Malaysia, but you know, if we're looking at exiting, you know, what's the situation?
Okay, in terms of exiting Malaysia, is not very tough. You just need to obtain the necessary tax clearances, and eventually that means also settling all your tax bills, and whatever tax dues to the authorities. Then you will either embark on a members voluntary liquidation to actually close off the entity and exit, or if you are generally that is the approach. And of course David can actually supplement our answers further.
Yeah, I think usually it's quite straightforward. If you have an ongoing business in Malaysia that has decided to close down, you just have to make sure you've paid all your past income taxes. And once that is cleared, then all the capital proceeds can be remitted back to the home country with no further withholding taxes.
Thank you. So, and Stephen and David, while you're there, can I just talk a little bit about how Malaysia is looking to open up? Just yesterday, Malaysia's Minister for Investment, Trade and Industry, Tunku Zafrul Aziz, posted an article on his LinkedIn site. And it was from the South China Morning Post on Malaysia liberalizing its markets. The article was about Malaysia opening up in the electric vehicle space. And the minister said, and this is quite very new to me, you know, Malaysia's certain sectors have been very protected for a long time. But he said, our goal is to make Malaysia among the top 30 economies in the world, and for it to be in the top 12 in the global competitive index within the span of a decade. And he went on to say that in some cases, we may have to open up to be competitive globally and regionally. Now, what does this mean for businesses interested in industries that have typically been protected, like the car industry, for example? Are we going to see Malaysia opening up sectors which traditionally have been protected from foreign direct investment? And the car industry is one. I think, especially in the electric vehicle space, there seems to be a lot of interest in Malaysia in this industry.
Okay, let me just, David, you can go first.
Yeah, maybe I can start first. Yeah, I think it's good that you picked up this article, or also announcement from the Minister of Trade. I think it's very encouraging that the government recognizes that in the past they have been a bit too restrictive, and it was perhaps self-defeating to be too protective. And I think it's good also that there's a lot of competition in the region. Felt in the more recent years. So Malaysia used to be further ahead, but now with the competition, it's becoming harder. And, to avoid complacency setting in, I think it's good to announce that there'll be liberalization. And the EV industry is something that government has been trying very hard to promote. In the past 2 years, there have been tax incentives coming in for EV cars from the perspective of owners, and also for people renting EV cars. You can get tax deductions for the cost, and also import duty reductions for EV cars as well. So I think in the interest of reaching net zero by 2050, the government is really pushing hard on this to start with. I think there are a lot of other green initiatives in the pipeline, but this is one of the first. But I think, yeah, coming back to what I said at the beginning, it's good that Malaysia recognizes that there's competition all around, and we need to really get our people to be on their toes a bit more. Thanks.
Certainly heating up. I know Elon Musk has said he's going to be doing something with Tesla in Malaysia, but the big one is setting up the factory, and I think we're still waiting to see where he's going to put that. And I'm looking forward to hearing Indonesia's presentation from video tomorrow, because I know supply chains along the electric vehicles line also huge, not just in the EV sector, but across all sectors moving into Southeast Asia. James, can I bring you in here where we're talking about seeing UK companies moving into the region and either using supply chains and benefiting also from CPTPP. We've got Malaysia, Singapore, Vietnam who are here. I did put the question out as to who the fourth member of the CPTPP is, and someone mentioned Cambodia, which is incorrect, so I'll keep everyone guessing. But are you seeing companies benefiting from CPTPP? How should they benefit? And to the point about the electric vehicles industry and supply chains in Southeast Asia, how can UK companies benefit from this shift?
Yeah, absolutely. So I think it's important to say with CPTPP that it's still in its early stage. So what are the kind of immediate effects are the tariff rate reductions across certain products, and all of that full description is online to have a look at there. But I think there are two kind of more important aspects which are kind of long-term benefits of joining CPTPP. The first are the kind of the political relationships going on. As part of this group, we are now committed to improving relations and getting rid of market access barriers and issues that prevent our, the free flow of trade on a regular basis. So this is a commitment between all of the governments to work together cooperatively and make sure that the trade relationship is as good as possible. So it's an investment into the future. The second are actually the platforms that are created through CPTPP. So as part of this community, we are now invited, we are in the room at the table to a large number of trade committees that meet on a regular basis. And those committees, their sole purpose is to make trade easier between these countries. So whilst there are kind of short-term immediate effects and benefits of joining CPTPP for our businesses in the UK, a lot of the real benefits come from that long-maintained strengthening relationship with some of the most dynamic growing markets in the world. So that's the advantage. It's in the long term. But on gov.uk, there are going to be a number of sector by sector explainers which talk about some of the immediate and long-term benefits of joining this for the UK. And when it comes to electric vehicles, this is obviously a massive strength and priority for the UK. This is something we're investing a huge amount of effort in as government, and lots of teams work in DBT to make sure that all of our businesses in the UK that work in net zero, but of course in covering electric vehicles as well, get the best support from government as possible. I think what we're generally seeing in this region are the successes of our strengths. We have a number of competitive and comparative advantages in this space, and it's businesses in those areas that really get the advantages from the grow and shift in this market. But this is something that's it's growing here, of course, but it's growing everywhere. So I think there are lots of opportunities, and DBT is there to support wherever it can.
James, just very quickly, we've got a question coming from Angie. She's asking that, do services also covered in your scope of work?
They absolutely are, yes.
Fantastic. Thank you very much. We've got about 5 minutes left, and we've got quite an interesting question as well that's been put to the panel. 2 questions. So I'm going to invite sort of closing remarks from the panel and also invite you to address this. But to all of you, how easy or complex is it to deal with your respective tax authorities? And would you say that they are reasonable? So I'll leave you to answer that in a polite and correct way. But also we've got a question from Noel Clahane from Video Global Office. Today's 3 countries are CPTPP members, as is the UK, but are also members of RCEP, Regional Comprehensive Economic Partnership, which is the other large regional FTA. Which of these trade agreements, CPTPP or RCEP, are more preferential in general for incoming investment from a UK company in the panel's opinion? So if I can invite you to reflect on that in your closing statements, we'll stay in the same order: Malaysia, Singapore, and Vietnam. And Noel, you are correct. The answer of the 4th member of CPTPP is indeed Brunei. Stephen, can I invite you for your reflections on how easy it is to deal with your tax authorities and CPTPP or RCEP for incoming investment?
Definitely the tax authorities, I would say generally in the overall perspective, they are reasonable. They do listen to your arguments if you have valid arguments, and it's not a one-sided communication if there's any disputes. And definitely professional firms like us, we do, if there are any disputes, definitely we are able to assist in terms of there's a tax investigation or dispute resolution with the tax authorities. Going to the RCEP and CPTPP, personally and professionally, I thought that two of the trade agreements, the regional FTAs, are rather important, because you can't afford to miss out the trade agreements in this region, as although we are a bloc of 10 countries in ASEAN, if you ratify a trade agreement and not the other, and you are excluded out from certain FTAs, then you are not that competitive compared to your regional peers, and hence we should, as a country that is relatively open, I believe Malaysia should actually capitalize on all the opportunities to ratify basically all the regional collaborative FTAs and partnerships, as what we have done for RCEP and CPTPP.
Thank you, Stephen. David, you've got 30 seconds, and then Evelyn and Hilary.
On tax authorities, I think I have encountered incidences where they were not reasonable, but I think the key is relationship, because at the end of the day, in addition to putting your points forward and making sure that you know the law, it's important to have good relationships with the tax authorities. So the key is to escalate to the higher level officers, and if you know them, it makes all the difference. Question number 2 on CPTPP. I only have some numbers from a report done by another accounting firm. Investments are to increase by about 112 billion cumulatively, 112 billion US dollars, if you look cumulatively up to 2030, if the CPTPP is to be put in place. And wages are expected to increase up to 4% by the end of 2030 as well. This is based on an independent report. So I think it looks like, extensive studies have been done to make sure that numbers-wise, it can be justified. I don't have a similar report for the RCEP, but I expect that that there will be significant benefits there as well.
Thank you, David. Evelyn, very quickly.
When it
how
comes
friendly
to
are you?
Yes, tax authority, definitely friendly. And I would say of late, their approach has been to engage with the business community. They want to know business model, how companies are being run. They want to understand their business model in order to assess, the right tax treatment on them. I sit in the tax committee under the Singapore Chartered Tax Professionals, and I chair the committee, and I would say that they are very open in terms of all the feedback that we give, and they want to know more and how to make this whole tax filing administration more efficient. They are certainly reasonable, and they are, have their ears open for us, to escalate issues, feedback for better engagement with taxpayers.
Thank you, Evelyn. I'm going to come to Hilary, and then James, your question will be, what's one piece of advice you give to UK exporters into Southeast Asia? Hilary, over to you.
Okay, thank you very much. A quick one is that yes, our tax authority are reasonable. They are quite prepared to listen. All right, okay, and provide your justification or whatever. Okay, second one is that I approach the second question from the perspective of a foreign investor. Okay, if Vietnam participate in many FTA and also with the regions and other regions as well, I think that the investor can benefit a lot, and as a community. So the answer to this is that it's quite beneficial for Vietnam to participate in all kind of bilateral and also multinational, multi-party, agreements. Okay, so this is my very quick answer to the two questions. Over to
Thank you,
Alan.
Hilary. Thank you very much. And we had a webinar on Cambodia, and they also said they benefited tremendously from RCEP as well. But we'll have that for another day. James, over to you for your final thoughts. What's your one piece of advice you'd give to a friend looking to export to Southeast Asia?
One piece of advice, I suppose, is to just give it a go. So it's a kind of regularly said thing about Southeast Asia, but there's such diversity in the markets, right? If you're interested in one of the markets, but your product doesn't quite work there, that doesn't mean the rest of Southeast Asia isn't for you. So don't be put off by that. There's huge diversity in this region. And the second kind of bit of advice on that would be to get in touch with DBT, because we can help you on that journey. Thanks, Alan.
Thank you very much, James. And that wraps up our webinar for today. I've certainly learned a great deal, and I hope that that's provided you with food for thought on which countries and how to invest in. But we do have more. Do join us tomorrow at the same time, where we'll hear from presentations from Indonesia, Thailand, and the Philippines. Another 3 more important markets with tremendous opportunities. Until then, I'm Alan Lai from the UK-ASEAN Business Council. On behalf of BDO and the UK-ABC, thank you for joining us, and we look forward to welcoming you tomorrow. Thank you.